Hey there, and welcome. This guide has been put together by the experts at My Tax Accountant. So you're a freelancer in the UK. You've got the freedom, which is amazing. But let's be honest, the finances can feel a bit, well, daunting. Today, we're going to clear all that up and demystify your taxes for the 2025/26 tax year.
Does this sound familiar? You love what you do, but that little feeling of dread creeps in when you think about HMRC and tax returns? Yeah, you are definitely not alone. But what if you could actually head into tax season feeling calm and in control? Well, that's exactly what we're going to help you do today.
The team here has laid out a really simple, straightforward path through the maze of freelance tax, just to give you that confidence. So let's dive right in and get you started on the right track.
We've got a lot to cover, but it's all good stuff. We'll kick things off with the absolute basics, income tax and national insurance. Then we'll get into the next level, things like VAT and company tax for when your business is really flying. And you'll definitely want to stick around for the bit on how to keep more of your hard-earned money. Then we'll cover key dates, and finally, where to go for expert help.
Okay, let's tackle the big one first, income tax. Honestly, this is the cornerstone of the whole tax system for anyone who's self-employed in the UK. Getting your head around this is your first and most important job. The good news starts right here with something called your personal allowance. You can think of it as a tax-free head start from the government. It's the amount of money you can earn before you have to pay a single penny of income tax.
And for the 2025/26 tax year, that magic number is £12,570. Anything you earn up to this amount is all yours to keep, 0% income tax. It's a really crucial figure to have in your head.
So, what happens once you earn more than that allowance? Well, your income gets taxed in slices, or what HMRC calls bands. Let's make this real. Imagine Emily, a freelance graphic designer in London, and she earns £65,000 a year. Her first £12,570 is completely tax-free. Then, the slice of her income between that and £50,270 is taxed at 20%. And here's the important bit. It's only the amount she earns above £50,270 that gets taxed at that higher 40% rate. You don't get taxed 40% on everything, just on that top slice.
Right, next up, national insurance. This is not the same as income tax, and that's a key thing to remember. It's a separate payment you make that qualifies you for things like the state pension. For freelancers, there are two main types you really need to know about.
Let's break this down nice and simple. First, you've got Class 2. This is just a small, flat, weekly rate of £3.45. You only pay this if your profits go over that $12,570 threshold. Then you have Class 4. This one's a percentage of your profits. You'll pay 9% on any profits between $12,570 and $50,270. And then it drops to just 2% on any profits you make above that.
Here's a great way to look at it. Don't just see Class 2 as another tax bill. Think of it as your ticket, your entry fee to future security. For less than the price of a coffee each week, you're essentially buying into your state pension and other important benefits. It's a pretty small price to pay for that massive peace of mind down the line.
Okay, so what happens when your freelance business really starts to grow and take off? Well, you'll start to run into the next level of tax stuff. This is the point where successful growing businesses need to pay really close attention to stay on the right side of the rules.
This number right here is the big one to watch. For the 2025/26 tax year, if your total sales, your turnover, goes over £90,000 in any rolling 12-month period, you are legally required to register for VAT. And notice I said turnover, not profit. It's about the total amount of money coming in before your expenses.
So how does VAT actually work? Well, in a nutshell, you add 20% to your invoices, you collect that extra money from your clients, and then you pass it on to HMRC, usually once a quarter. But the great thing is, you also get to claim back the VAT that you've paid on your own business purchases. And here's a little pro tip. You can choose to register for VAT even if you earn less than the threshold. This can be a really smart move if most of your clients are VAT-registered businesses themselves. As you grow even more, another strategy you might hear about is setting up a limited company. This creates a legal separation between you and your business, which can be way more tax efficient. Instead of taking all your income as a salary, you can pay yourself in dividends, which have lower tax rates. It's a bit more complex to set up for sure, but the tax savings can be well worth it.
All right, now for everyone's favorite subject, how to legally hang on to more of your hard-earned cash. This isn't about finding dodgy loopholes. It's just about claiming all the deductions that you're perfectly entitled to. This part is all about boosting your bottom line. Just take a look at this.
This chart shows just how powerful claiming expenses is. For a freelancer making a £50,000 profit, that 10% slice for tax saved means thousands of pounds that are staying in your bank account instead of going to the taxman. So remember this, every single legitimate business expense you claim directly lowers your tax bill. It's that simple.
So what can you actually claim? Well, the list is long, but here are some of the big ones. All your office costs, things like software subscriptions, a new laptop, even pens and paper. Business travel is a huge one. You can claim 45 pence a mile for business journeys in your car. Then there's marketing, professional fees like paying your accountant, and of course, a slice of your home utility bills if you work from home.
And here's a fantastic quick tip. Instead of getting bogged down in complicated sums trying to figure out the business percentage of your heating bill, HMRC has a shortcut. If you work from home more than 101 hours a month, and let's face it, most full-time freelancers do, you can just claim a flat £26 a month. No fuss, no complicated maths needed.
Here's another really powerful tool in your tax-saving kit, your pension. It's a total win-win. When you put money into your private pension, the government automatically adds tax relief, basically giving you free money. Not only that, but your contribution reduces your total taxable income for the year. So you're cutting your tax bill right now while building a nest egg for the future. It's an absolute no-brainer.
Okay, let's switch gears. We've talked about what you pay and how you can save. Now let's talk about when you need to do it all. Missing these deadlines isn't a good idea. It comes with immediate financial penalties, so this bit is really, really important.
There are 3 dates every freelancer needs to circle in their calendar. First, the 5th of October. That's your deadline to register for self-assessment if you're new to freelancing. Then, the big one, midnight on the 31st of January. That's the final deadline to get your online tax return filed and pay what you owe. And for many people, there's also the 31st of July, which is the due date for your second payment on account. That's basically a prepayment towards next year's bill to help spread the cost.
And let me be really clear about this. HMRC is not messing around. If you miss that January 31st filing deadline by even a single minute, you get hit with an instant £100 penalty. And this is true even if you've already paid your tax or if you don't actually owe anything. It's a penalty purely for being late.
And that's not all. Here's where most people go wrong. They think the £100 is the end of it. It's not. If your return is 3 months late, they start tacking on a £10 per day penalty. These costs can spiral out of control really fast. But stay with me. The next point is how to avoid all this stress.
We have covered a huge amount of ground, and it's totally natural to feel like this is, well, a lot to handle on your own. But the great news is you absolutely don't have to. And that brings us to our final and probably most important section, getting some expert help. If you're looking at all these rules, rates, and deadlines, and you're feeling a bit of that pressure we talked about earlier, that is completely normal. Honestly, most freelancers feel exactly the same way. You're trying to be brilliant at your job and run a business. You don't have time to become a tax expert overnight as well.
And this is exactly where my tax accountant can step in. A good accountant makes sure you are always 100% compliant, so you never have to lose sleep over those penalties. They'll dig deep to find every single allowable expense, often saving you far more than their fee costs. But most importantly, they give you back your peace of mind and your valuable time, so you can focus on what you're actually good at, growing your business. If you're ready to make your life simpler, give them a call on 0208-570-8531, or you can drop an email to info@mytaxaccountant.co.uk. And for more great tips just like these, make sure you subscribe to their YouTube channel. Thanks so much for watching.